Let's talk about social insurance. Yes, it might sound dull at first, but it's actually your invisible financial safety net, quietly working in the background to protect you and your loved ones. If you work for a private company, chances are you're already part of the system, even if you don't realize it or think about it much during your daily routine. Every single month, a portion of your paycheck, along with your employer's matching contribution, is set aside and funneled into a government-managed fund designed to support you in times of need. It's not just another tax, it's more like a down payment on your future security, a way of investing in your own peace of mind. The idea is simple but powerful. Everyone chips in a little, so that no one has to face disaster alone or bear the full burden by themselves. Instead of struggling to save a fortune on your own, you share both the risk and the reward with millions of others, creating a community of support. So the next time you notice that deduction on your payslip, remember, it's not money lost, but a buffer being built for those tough times that can come out of nowhere. Social insurance acts as a kind of forced savings plan, protecting you from the unpredictability and ups and downs of private sector work, and giving you a sense of security. It's a system designed to make sure you're not left stranded if life throws you a curveball, whether it's illness, job loss, or unexpected expenses. Whether you're a careful planner or someone who likes to spend, social insurance is your past self looking out for your future self, making sure you have a safety net when you need it most. That's the real secret handshake between your job and your future, a quiet promise that you'll be taken care of no matter what comes your way. So, what's actually inside the social insurance goodie bag? Let's break it down, because there's more to it than you might think. First up, retirement payments. This is the money you can draw after years of hard work, so you can finally relax and enjoy your golden years without worrying about your finances. It's a reward for all those decades you spent building your career. Next, there are disability benefits. If you're ever injured or unable to work due to illness, you'll still get a regular income to help keep you afloat and maintain your independence, even when life throws you a curveball. There's also unemployment support, temporary payments that help you cover your bills and expenses if you lose your job through no fault of your own, giving you time to get back on your feet and find new work. And don't forget survivor benefits. If you pass away, your spouse or kids may receive ongoing support, helping them manage financially during a difficult time, and ensuring they're not left alone to struggle. It's not just about you, it's about protecting your family too. Social insurance is designed to look after everyone you care about. Social insurance covers retirement, disability, unemployment, and even your loved ones if the worst happens. It's a system built for all kinds of life situations. Think of it as a comprehensive safety net for life's biggest challenges, a way to make sure you and your family are always supported, no matter what comes your way. So next time you see that deduction on your payslip, remember, it's a lot more than just a number. It's real protection for you and those you love. Here's the big question. Is social insurance really a lifetime pension, or is it something different? Not exactly. The money you receive in retirement depends on what you and your employer contributed over the years, plus any investment growth. When you retire, you can take a lump sum or get installments, but once your pot runs out, those payments stop. Unlike a government pension, there's no guarantee that it will last for life. If you outlive your savings, unfortunately, that's on you. Think of it like a gift card. Spend it wisely, or it's gone for good. A true pension is like a monthly allowance that never ends, no matter what. With social insurance, you're in charge and manage your own nest egg. The key, your retirement fund is finite, so careful budgeting is crucial. It's your money, but also your responsibility to make it last. Let's break down the key differences. Private social insurance is what's known as a defined contribution plan. Here, you and sometimes your employer contribute a set amount to your retirement account over the years. You always know exactly how much you're putting in. But the final amount you'll have at retirement is uncertain, since it depends on investment returns and market changes. In contrast, government pensions are called defined benefit plans. These plans promise a specific monthly payment after you retire. Public employees receive a guaranteed income for life, calculated based on their years of service and average salary, providing a sense of stability. With private social insurance, your retirement payout depends on how much you contributed and how well your investments performed. The risk of market ups and downs falls on you. If the market drops or investments underperform, your retirement savings could shrink, making your future less certain. Government pensions, on the other hand, offer predictability. The government shoulders the risk and is responsible for making sure retirees get paid, regardless of market conditions. Private sector workers often have more earning potential and flexibility to choose investments, but they must actively manage their own retirement risk, making decisions about how to invest and when to withdraw funds. Public sector workers may trade higher salaries for the promise of long-term security and a steady pension. Neither system is flawless. They simply approach risk in different ways, shifting responsibility between the individual and the government. Understanding which system you're part of is crucial for shaping your financial planning and retirement strategy. One system gives you more control and more risk to manage. The other offers security and predictability, but less flexibility. That's the core difference between private social insurance and government pensions. Here's the bottom line. Social insurance and government pensions are fundamentally different. Social insurance is a savings and investment account. You and your employer contribute, and your retirement depends on what's in the pot. Government pensions promise a set monthly payment for life, no matter what. Private sector, more control, more risk. Public sector, more security, less flexibility. Social insurance is a great start, but it's not a lifelong salary. Understanding this difference is crucial for your future planning. Your social insurance is a foundation. You build the rest. Know your system, plan ahead, and take charge of your financial future. That's how you turn a deduction into real security.